Do you have an LLC? Have you ever wondered how you should pay yourself if you do have an LLC? Today we're going to talk about 4 different ways you can receive a payment from your LLC. Welcome to the 10-Minute Food Truck Training Podcast. My name is Bill Moore. I am a food truck business coach, author of 5 food truck vending books, including Food Truck 101 and Food Truck 201. This podcast is all about helping you start and grow your food truck business.
I was never really a runner. The way I see running is a gift, especially when you have stage 4 cancer. I'm Anne. I'm running the Boston Marathon, presented by Bank of America. I run for Dana-Farber Cancer Institute to give people like me a chance to thrive in life, even with cancer.
Join Bank of America in helping Anne's cause. Give if you can at BofA.com/supportAnne. What would you like the power to do? References to charitable organizations is not an endorsement by Bank of America Corporation. Copyright 2025.
Paying yourself is a big question within our Facebook group. How do I pay myself? I've got an LLC. How do I create that paper trail? So today I'm going to talk about 4 different ways that you can pay yourself. The first one is to pay yourself just like a W-2 employee. For a lot of LLC owners, that's the most advantageous way to receive a payment is just to treat yourself like an employee. You write a check, you go cash it. In this arrangement, you and if you have other owners that actively work in the business, you're considered an employee/owner. You receive a paycheck just like you would from somebody else's business. As long as your business brings in revenue consistent enough to cover your salary or your wages, this could be a way to set yourself up with a predictable pay for your household. Now, there is a caveat. According to the IRS, you have to pay yourself reasonable compensation. Now, this is a gray area. The IRS hasn't defined what they consider a reasonable compensation. But basically what most attorneys seem to think and most judges seem to side with is it needs to be a typical amount for someone doing your type of work in another business. So you as an employee/owner would be the same as a manager at, say, a fast food restaurant. And those managers make a wide variety of different pay amounts, depending upon if it's a big corporation like McDonald's or Burger King, or if it's a smaller chain. So you're probably going to be somewhere between the $35,000 to $70,000 range. Some of the bigger restaurant chains with busier per unit sales pay even more than $70,000. So you got a big span that could be considered reasonable compensation. If you pay yourself in this way as a W-2 employee, you can elect to be treated as an S corporation for tax purposes, and I'm referring to the LLC. The advantage is that you only pay FICA, Medicare, and Social Security taxes, and you only pay that on your salary or wages yourself and not all the business's profits. So that could work out to be maybe around a 15% tax savings for your LLC. The second way that you can get pay from your LLC is to earn profit distributions. What that means is any LLC member, they're considered to be a shareholder, and they can be paid through profit distributions, or it can also be called an owner's draw. This means passing the business profits onto the folks that own the LLC. This process can be a little bit more complex if you're part of a multi-member LLC, but most of us are just a single-member LLC, and that makes things pretty simple. You can consider this as pretty much paying yourself the same way somebody would pay you as a freelancer. Money comes in, and then you just distribute it to your personal bank account. It's just flowing through the LLC. That's why they call it a pass-through entity. For a multi-member LLC, your operating agreement should lay out how the profits are going to be allocated and at what frequency. The drawback of using this as your main payment method is that you'll have to pay those pesky self-employment taxes on all the money that comes into your business instead of only on the designated salary. If your business is also your main source of income, you might instead pay yourself a salary as an employee and then take an owner's draw on the additional profits. And that does save you a little tiny bit of money. The third way that you can pay yourself through your LLC, and this is one I don't particularly care for, but you can pay yourself as a 1099 independent contractor. Now, you guys know that I don't like when food trucks try to hire people as an independent contractor, because what they're doing is they're cheating them out of their Social Security and their Medicare, and then they're actually injuring that employee because the IRS does not recognize our type of work as being eligible for a 1099 independent contractor. It's different when you're paying yourself through your own LLC. There's not a lot of benefit to doing it this way other than you got a clear-cut paper trail, but you're still going to have to be paying the exact same amount of taxes as if you were just having all the income pass through the LLC, and then it goes straight into your bank account. So this is one of those that you can do it, but there's not any kind of a benefit to it. The fourth thing you can do is just keep the money in the business. The last option is to not give yourself a paycheck at all. You might want to do this if you put the earnings back into the business instead of your own pocket, and if you want to build savings within the business. Now, you still got to pay income taxes on the profit that the business generates, even if you don't take a paycheck or a distribution. The tax authorities treat LLCs, again, as a pass-through entity, so those profits are included in your income for tax purposes. The business doesn't pay any separate tax on those profits. You got to be careful about using this option. Not paying yourself could pass the reasonable compensation if the business isn't generating much revenue. But typically, you can't leave money in the business just to avoid paying those self-employment taxes. That could end up costing you a whole bunch of fees and in back taxes down the road. So as I always say, when it comes to taxes, when it comes to anything legal, when it comes to insurance, talk to the experts. So I've given you 4 different ways that you can pay yourself out of your LLC. Now it's up to you to go talk to your attorney or your accountant and ask them what's the best way, considering my personal financial situation, for me to create that paycheck or that owner's draw or whatever you want to call it coming out of the LLC to go to your personal bank account. Thank you so much for listening to the 10-Minute Food Truck Training Podcast. If you're finding all the information helpful to your food truck business, please become a monthly supporter of the podcast. Just hit the support button or follow the link in the description. Every little bit does help keep us going. Join our Facebook group. It's called Food Truck Training. We have a whole bunch of awesome members at all different levels, from brand new beginners to decades-old veterans. They've all got your back when it comes to helping you with your food truck. And again, thank you for listening. Come back tomorrow because you know I got plenty more to say when it comes to helping you and your food truck business grow.